still sitting by the moon, unraveling this ball of hope, scoping the evidence upon a lifetime in my mid-20s, like I know what's round the corner. Please excuse me for my arrogance, but ever since I've been blessed by the sky's inheritance, I've never been the same. The battle still remains and the struggle's not a game but a test. Repeat this not to preach but to remind myself. Seems I wake in the days while the world spins without me. Arrived at the fork in the road, could turn back, repeat the same story, or march forward and embrace change and reflect upon his glory. I'm a selfish man, therein lies the whole problem. Torn between my actions and the will of my heart. I had to take it all apart to see where I stood as a man, to depart from this world and leave it in his hands. Come on.
Yes, y'all. You don't stop. Come on, y'all. Yes, y'all. You don't stop. Come on,
Yeah, and it looks like I'm heading for the gold, y'all. Touring on a pothole road, y'all. I get it even if I didn't fit in, winning right up to the end, and like I didn't even know, y'all. I have Pop's genetics, working hard never to get it, like shit or better than letting life get the best of my efforts. Instead I dedicated to bettering my steps, measuring investments, watch me do it to the death, y'all. Run it fresh 400 miles per minute to finish the course, pause to deal with interference, back to business, witness this here longevity. Even if you ain't calling it that, it's your choice to choose your own recipe to destiny. Yes, with all the breath in me, I'm blessed to be believing it'll reach them whether or not I see them. A direct extension connecting the lessons that I've learned to listeners wishing to get it together now. Word.
yes, y'all. You don't stop. Come on, y'all. Yes, y'all. You don't stop. Come on, y'all. Yes, y'all. You don't stop. Come on, y'all. Yes, y'all. You don't stop. Come on, y'all.
Yo, I'm still sitting by the moon, unraveling this ball of hope, scoping the evidence upon a lifetime in my mid-20s, like I know what's round the corner. Please excuse me for my arrogance, but ever since I've been blessed by the sky's inheritance, I've never been the same. The battle still remains and the struggle's not a game but a test. Repeat this not to preach but to remind myself. Seems I wake in the days while the world spins without me. Arrived at the fork in the road, could turn back, repeat the same story, or march forward and embrace change and reflect upon his glory. I'm a selfish man, therein lies the whole problem. Torn between my actions and the will of my heart. I had to take it all apart to see where I stood as a man, to depart from this world and leave it in his hands. Come on.
Yes, y'all. You don't stop. Come on, y'all. Yes, y'all. You don't stop. Come on, y'all.
Yeah, and it looks like I'm heading for the gold, y'all. Touring on a pothole road, y'all. I get it even if I didn't fit in, winning right up to the end, and like I didn't even know, y'all. I have Pop's genetics, working hard never to get it, like shit or better than letting life get the best of my efforts. Instead I dedicated to bettering my steps, measuring investments, watch me do it to the death, y'all. Run it fresh 400 miles per minute to finish the course, pause to deal with interference, back to business, witness this here longevity. Even if you ain't calling it that, it's your choice to choose your own recipe to destiny. Yes, with all the breath in me, I'm blessed to be believing it'll reach them whether or not I see them. A direct extension, connecting the lessons that I've learned to listeners wishing to get it together now. Word.
Yes, yes, y'all. Hey, you don't stop. Come on, y'all. Yes, yes, y'all. Hey, you don't stop. Come on, y'all. Yes, y'all. Hey, you don't stop. Come on, y'all. Yes, yes, y'all. Hey, you don't stop.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is April 11th, 2023. And we have a bunch of breakouts and bull flags. Crypto up only price action is officially active. Okay, up only price action. For those of you who don't know what I'm talking about, we're literally at the point where if you put it in, if you plant the seed, it will sprout monstrously. Okay, this is the period of time in crypto where legends are made. And people say, "Oh, I saw that, such and such invested in such and such asset, and then 2 weeks later, it went up 100x, 200x. Like, this is the type of price action that up-only mode creates. Okay, I'm not saying we're going to 100x or 200x in a week or two, but I'm saying that we're in impulsive price action. Okay, to use Elliott Wave terminology, we're in impulsive price action. You go up, and you go up fast. From time to time, you make intermittent corrections, but those corrections are consolidative, and they're shallow, and they're relatively quick, and then you go up a lot more. Okay, this is why people are so attracted to crypto, because it has potential for growth like no other asset class. Okay, it's times like these. Okay, and the reason we can enjoy this kind of price action is because it doesn't always happen. Okay, it doesn't always happen. We're not always in up only mode. Okay, if crypto were to always sprout up, it would not have the same value. Okay, the idea is any asset, and this is why we study Elliott Wave, this is why you study Gann analysis, this is why you study Dow theory, this is why you study Wyckoff analysis. All of them say the same thing. There are various phases in any market, and there are certain periods of time where you can enjoy impulsive price action or markup or whatever you want to call it, or an impulse to the upside. But most of the time, price doesn't move up only. Okay, I've explained this before on the channel, and I'm just going to reiterate this point because it's germane to the topic today. Okay, you can consider the market to have four phases. Any market, doesn't matter if you're trading shit, gold, crypto, watches, it doesn't matter. Okay, there's an impulsive down phase, meaning it's going down and it's going down fast. Okay, then there's an accumulation phase, which is kind of collecting or accumulating, or it is an intermediate phase that makes sure all of the supply that was dumped down on the market is now sort of bought up okay, by somebody. Somebody has to buy them at a discounted price. And then there's an up-only phase. This is the phase that we're in. I'm going to show you why we're in this phase, okay? And then once the up-only phase is finished, it comes back around. And you experience the sideways distribution phase, or the phase where the supply that was marked up considerably now is being distributed on the market, okay? It's the same thing, and it's a cycle, just like everything else in nature. It's a cycle, and it goes round and round and round. The other point I want to make is this. You don't spend the same amount of time in every phase of the market. People do not understand this. This is crucial. If you study any basic theory of technical analysis, of chart analysis, you understand this very important point. Timing the market to get this up-only phase market, which is coveted, everybody wants it, obviously, for obvious reasons, is difficult. It's challenging. And you only get this, it's kind of like an astrological or a celestial rarity. It doesn't come along all the time. One of the best ways to catch this up-only price action phase is to just pay attention. Pay attention, pay attention, pay attention. Once it comes, you'll know it because you've been paying attention. Very difficult to catch it by accident, or to catch it just, on the off chance. Because when it happens, it usually comes and it goes. Okay? Most of the time, for anybody, it doesn't matter if you study Elliott wave theory, it doesn't matter if you study any other system of price action. People should know this. Most of the time, the market is in either this phase or that phase. It's sideways accumulating or sideways distributing. Less often is the market actually in the down only or up only phase. Okay, so if I were to ascribe a pie or a fraction of time, I would say half of the time the market is distributing. It's in sideways distribution. About half of the time it's consolidating for accumulation. It's in this phase. 1/4 of the time, well, am I doing this right? Sorry. Let's try that again. Okay. 1/3 of the time. Yes. Okay. 1/3 of the time it's distributing at this top phase. 1/3 of the time it's accumulating in this bottom phase. 1/6. Shit. How do we do this? Yeah, that's right. 1/6 of the time it's going up only. 1/6 of the time it's going down only. Does that equal 1? Let's double check that. Oh my god, it's been a while. So 2/6 is 1/3. Yeah, 3/3 is 1. Okay, so 1/6 of the time. So if you were to split that, just in a calendar year, 12 months, right? So for 4 months, you can expect, 4 months out of the year, you can expect some, actually, let's think of this, let's join these two accumulation and distribution phases, because they're essentially sideways phases. Most of the market participants get they get disinterested, they lose interest, they're not paying attention, they get distracted by the fact that the market's just sideways for most of the time. This is so important. Why is this so important? Because whenever I talk to my friends, family, anybody about crypto, about the potential, not even the idea of it, sort of having a real money or a non-devaluable asset that can beat out inflation, all that stuff. That all aside, just as an investment vehicle. They're like, I don't know about that. You know why people say that? It's because when they see crypto and they look at the prices, half of the time, or 2/3 of the time, right, the prices are just doing this. okay? And even worse, if it's doing this, meaning it just came out of a down-only price phase, okay? I understand we're 10 minutes into the stream, and I haven't talked about the current price of Bitcoin. I haven't shown you any charts, except the chart we're looking at. But this is so fucking important. This goes back to why you're able, on April 11th, to be watching this video, and you're probably invested in crypto, and you're probably going to make it. You're probably going to do really fucking well in the cryptocurrency markets because you were paying attention, because you did not get shaken out of the crypto market because of these two phases. This is why it's so important. About 2/3 of the time, 2/3 of a year, right, is what? That's 8 months. Most of the year, the price is doing this, okay? And I'm just using on average, okay? I understand that. This is just average, please. This is not like actual. So most of the time, price is sideways. For a sixth of the year, what's that? 2 months, you can expect the price to go up only. 2 months, you can expect the price to go down only, okay? That's where the action happens. You can either short on the down only, you can long on the up only. And in those periods, people make a lot of money. People don't typically make much money in the market. If it's crypto, if it's stocks, if it's, trading, whatever. When it's sideways. And remember, it's sideways most of the time. This, when I understood this by, my expertise is Elliott wave theory. I study charts through the lens of Elliott wave theory. I look at charts all the time. Spend tens of thousands of hours looking at charts. When this concept became clear to me, it was so easy to understand why so many people don't make it and why I was going to make it in the market. It's because I'm going to pay attention and I'm going to, by hook or by crook, catch this. Whether I time the market, I get close, it doesn't matter if I'm perfect in my timing. I'm going to spend enough time in the market to make it. To get this 1/6 of the time on average period where the price is going up only. This is why this is so important. It's not just a catchphrase. It's not just some gimmick. There are periods and phases in the market where you should expect price to just boom. And it's not people, and what you're going to see is this. Many people are going to say, oh, this is unsustainable. You can't keep going up like this. Or we have to come back down below to this price because the greed and fear and greed index is too high. Or the RSI index is overbought. Or blah, blah, blah. They're going to give every reason in the world because they don't properly understand what I just explained. There are periods of time where the market just goes up predominantly. And it's not looking to make big corrections. And I'm going to actually talk in this stream where I can expect and when I can expect with a high degree of probability the next major correction. Okay? The next major correction in all of crypto. So now, let's start off with this chart. This is the total cryptocurrency market cap. Okay? This is basically the chart that takes every single last asset in crypto, puts them all together, amalgamated in one chart. Okay? And so this is why, to the left, you see we're counting in trillions of dollars. The crypto market cap right now is about at $1 trillion, a little bit above $1 trillion, okay? What I want to draw your attention to is this, right here. Right here. This coincides or corresponds, this pattern that you're seeing corresponds to the third of the market that I just described as being accumulative, right? Basically sideways accumulation after the market went down only for, about 2 months. Is it about 2 months? Let's see. I don't know. Probably much more than that. Let's see. Much more than that. Okay, I was just talking averages. Anyway, the market went down only. And then it went sideways for a considerable amount of time. Okay? this is complete. This phase of the market is complete. A lot of people don't understand this. A lot of people, I heard BitBoy this morning on his live stream and his technical analyst. Everybody always agrees on that channel. Good for them. But there's doesn't seem to be much dissent in terms of, or originality in analysis, chart analysis on that channel. They think the price is going to do something like this, which makes absolutely no sense. Literally, absolutely no sense. First and foremost, once you spend all this time, it doesn't matter if it's 300 days, as it is in this case, or if it's 15 minutes on a small time frame, right? It doesn't matter the time frame. When we do price action or charting, it is time frame agnostic. Once you get a pattern like this, that's well established. It's established in terms of the resistance. It's established in terms of the support. And you've treated the support and the resistance by testing both extremes, okay? You've bounced or you ping-ponged up and down through a channel. You do not come back. Once you break the channel in earnest and retest it as support, you don't break back into the channel. Again, once you break the channel and retest it as support, this right here, we remember, this is the weekly chart, so it may seem like, oh, that's insignificant. Actually, these 3 weeks were crucial. 3 weeks that we spent sideways, we spent consolidating at resistance, breaking and retesting this accumulation, this 300-day accumulation, okay? That means you do not come back below this level. This is technically what you see throughout. You can prove this to yourself. If you read enough charts, you'll see this consistently throughout all assets, throughout all time frames, okay? So the idea that you're breaking back there doesn't make much sense. You're leaving this to leave it for good. Furthermore, once you've left this, again, this represents the bear market accumulation. Now you go up from here. This is your launch pad. This is where all of the supply that was dumped on the market during this whole period of time was accumulated. Okay, up and down and up and down and up and down. The supply is accumulated. Now it can be marked up. That's Wyckoff in a nutshell. Wyckoff, the whole purpose of his analysis was to try to time and determine when price would mark up or when price would mark down based off of these channels of accumulation and distribution. Okay, so just, dovetailing or segueing into yesterday's live stream discussion, Wyckoff doesn't ever talk about these channels breaking up and then coming back down. Do you understand? Once you have your sign of strength that we talked about yesterday, you go from phase D into phase E, and it's you're gone, you're done, you're out. So, provided you understand that basic fact of fundamental and basic technical analysis, it doesn't matter if you're using Wyckoff, it doesn't matter if you're using Elliott wave, and you consider this to be 2 degrees of AB basing and a pivot, you're gone. Now, question is, where to? Where's your next resistance? We talked about this yesterday. There is no major resistance here. Major resistance is the operative phrase. There are resistances, obviously, throughout this region, but no major resistance. Your next major resistance is all the way up here. Why? Let's zoom out for a second. Your next major resistance in cryptocurrency is when the price hits this trend line here, all the way up here, making higher highs in most assets. Remember what we're looking at. This is an aggregate total crypto market cap chart. So it's no one asset in particular, but in aggregate. From here, where we're at right now, you should not expect a major retracement in cryptocurrency until you experience about a 3x in the total crypto market cap. So on average, every asset in crypto is going to 3x. On average. That means some are going to 7x, 8x. Others are going to 1.5x. Okay? On average. This is what the chart is telling us. Okay? If this happens, obviously, see, I have an alarm here. Okay? I have an alarm here. And is this the end of the bull run? No. It is not the end of the bull run for many reasons. But the bull run is not when crypto goes and does a 3x. That is not a bull run, okay? That is not a bull run. This is a single wave that is likely to be, in the scheme of things, your first wave, and then you're likely to get a second wave, okay? A second wave, remember, is going to take as long as your first wave, and it's going to come down in 3, and it's going to correct between the 382 and the 618 Fibonacci retracement of your first wave. So, for instance, if on average, crypto goes up 3x from here, okay, however long it takes, maybe 2 weeks, maybe it's either 2 weeks or 6 weeks. Why do I say that? Remember, today is April 11th. When was the full moon? On April 6th, right? When do we know price on average, based off of 50 plus years of market research, price bottoms or finds a local bottom 0 to 3 days after a full moon? So April 6th, 7th, 8th, 9th. April 9th is when we started getting this move up, okay? So every 2 weeks there's a new phase of the moon, a full cycle of the moon. So if the full moon was on April 6th, you can expect the new moon to be on April 20th. On April 20th, we can expect on and around that date the price to experience a local market top, okay? And so that's 2 weeks from now, more or less, give or take, okay? Add another 2 weeks and you have another full moon. At another 2 weeks, you have another new moon, which is another local market top. This is why I'm saying 2 to 6 weeks. I think you guys get what I'm trying to say here. And this is market analysis using moon phases, using technical analysis. All of that stuff comes into the analysis. And it's not mumbo jumbo. It's not witchcraft. It's just technical analysis using data that has consistently, with a high degree of probability, to a statistically significant degree, shown us that it works. Were you surprised when on April 9th we got a pump 3 days after the full moon? I hope you weren't, okay? Because we talk about moon phases all the time on this channel. It's not our primary method of analysis, but we mention it from time to time. So, as I was saying, if the price goes up about 300%, comes back down 1.8% of that, you can expect price to have done what? My math isn't that good. Let's see. And I'm just eyeballing the 61.8 right there. Okay, price will have done from here after a 3-wave retracement about 86%. Okay, in all of crypto, okay? And this makes sense. Why? Because if we're looking at the total crypto market cap, okay, this kind of looks like Bitcoin. Makes sense because Bitcoin's the largest crypto market cap. This is a flat correction, okay? And one could say that just judging by this pattern, right, there is a level of resistance right here, okay? It was resistance in this period right here, basically at the bottom base of this B wave, and it was support for this zigzag right here, okay? It was support for the B wave or X wave, whatever you want to call it, of this zigzag. So this is kind of like the midpoint where if price goes, consolidates a little bit, continues, right, in, 5 waves, more likely than not, it comes back down to this level, thereabouts, at the 0618 to retest broken resistance as support, right? This is as significant a level of support as I'm seeing on the charts, okay? Again, this is not Bitcoin, but it's very similar to Bitcoin, and it's why I've been talking about the $38,000 level. We're going to go into Bitcoin in just a moment, so hold on. But understand that all of crypto is doing the same thing, more or less. Every last single asset is on a different, it's unique in its progression. But in aggregate, there is a resistance here that is significant enough to break and to retest. You're going to get a break all the way up to all-time highs more often than not, okay? Not in every asset, but more often than not, you're going to get all-time highs and a retest of the break, not necessarily of the all-time high, but a break of that resistance, that significant resistance of this distribution level right here, okay? So that is my entire cryptocurrency analysis. This is why the idea that we're going back under in Bitcoin, right, to below 30K is inane. It is inconsistent with basic technical analysis. It makes zero sense from a more progressed or more advanced analysis of the charts. But people will say this, and I'll tell you why. People are not saying that because they're doing analysis that tells them this. None of the charts tell them this. What tells them this, and this is something you need to be careful of, don't let non-technical aspects influence your chart analysis. I know it's tough. It's almost impossible. But most people, they're doing in their heads an analysis of timing the market based off the 4-year cycle. And in their minds, Bitcoin should not be in a proper, actual, bona fide bull market up until the halving occurs sometime in 2024. And we're only in 2023. So for them, you've got to go up, but you can't go up too much. This is why. Understand that. So don't get fooled by mainstream analysts telling you that this is a fake rally and it's going to go right back down to 20 to 25K. Obviously, everything's possible. Very, very improbable. Okay? Let's take a second. Jeong says, hi, Dean. Hi, Jeong. Starting bullish market? Yes, absolutely. Just like I said before. And we can look at this in Bitcoin, which I'll show you here on the higher time frames. Let's go to the daily time frame. Guys, don't forget to like, share, and subscribe if you're getting value. If you're not, then feel free to unsubscribe or dislike the video. So, Bitcoin on the daily chart is showing you that after this level right here, and I said that the bull market actually started on January 1, okay? If you had bought Bitcoin or most assets on January 1st or on the New Year, and actually I went to a New Year's party, or was it a Christmas party? I don't remember. But I saw a lot of friends. If you're listening, Philip, if you're listening, Bardia, I saw you guys close to the New Year, and I said, bye. I said, if you haven't bought yet, it's a damn good idea. Okay, had you done that, you would have been up and up and up on your investment considerably. Okay, because from my analysis, saw that the bull market started there in earnest. Okay, this is an impulse. This is a parabolic wave. This is a wave 2 correction, very likely because it's coming. And it's taking about the same time as this parabolic uptrend, and this parabolic uptrend just looks like a 5-wave progression, all that stuff, okay? Now, I also said it wouldn't feel like a bull market until we got outside of this. And this is important. And I remember saying it wouldn't feel like it, and the market wouldn't feel bullish, and most market participants wouldn't feel like it's a bull market, and they wouldn't even characterize it as a bull market. And I wouldn't blame them because we're still within the confines of this bear market accumulation, this zone. Although, in order to leave a channel. In order to leave a channel, understand you've got to jump out of it. You're not going to just saunter out of it correctively. So you have to start at the bottom. And that's not, obviously more conservative trading would dictate that you wait until the price leaves this channel, retests it as support, then you want to get involved, okay? Anyway, so yes, it is a bull market. It's been a bull market, but it feels like a bull market now, Jiyung, okay? So Jiyung says a few hours ago, Bitcoin over 30K. Yeah, and expect it to stay over 30K, okay? All the people, and remember, a lot of very prominent analysts are still telling you Bitcoin's going to 12K, Bitcoin's going to 15K. One of the main reasons they're doing that is because they're looking at the traditional markets, which are in a bear market rally, okay? And this is the problem with sloppy analysis. For them, Bitcoin is a derivative of the price action or the momentum of the traditional markets. They're not, it isn't. And it's not necessarily decoupled. It's never been coupled. Bitcoin and traditional markets are both coupled to the DXY. We've made that point on this channel ad nauseum, okay? Bitcoin is in a proper bull market. The traditional markets are in a bear market rally. We showed that a long time ago on this channel, but we don't spend time in traditional markets on this channel because this is the daily Bitcoin update. And the traditional markets, frankly, have nothing to do with Bitcoin. The only thing that the traditional markets have to do with Bitcoin is the fact that they're both derivatives inversely correlated to the underlying asset, which is the US dollar. So we look at the DXY, and the DXY affects both. Okay, so yeah. Osman says, hi, Dean, thanks for the stream. No problem, my pleasure. Osman says, Dean, aren't we expecting that huge move to pass all-time high after the halving until the end of 2025? Looking at the past cycles, that huge move would come after the halving. If we go by time, maybe I'm wrong. Osman, like I said, I don't think that we need... I think that the halving... And if you look historically, and I've showed this on the channel as well before, and I don't really feel like doing it today, but historically, if you look at all the different halvings and the different progressions prior to the halving, you've gone up. The bull market has started before the halving. Okay, a lot of people will acknowledge that, but a lot of people also say that the bull market only starts at the halving. But, with more careful, I guess, more technical analysis, right? With not just looking at the 4-year cycle and looking at the Bitcoin halving and saying the bull market starts then, actually looking at wave progressions, you can see very clearly that you can get impulses before the halving, well before the halving. So you will have done a wave 1, wave 2 before the halving. This is the type of price action that I expect. So I expect us to have all-time highs way before the halving. Okay? Way before. So yeah, Osman says, you just answered my question without seeing my question. Cool. Osman says, we bought way before when Bitcoin hit the bottom, but most of my alts are not moving yet. Yes, and I'm going to talk about that right now, or not right now, but in a moment. I'm going to talk about the alts, and we're going to look at Bitcoin dominance. Don't despair. The altcoins are at the precipice of their major breakout, okay? And Bitcoin dominance will start coming down, not because Bitcoin is crashing, but because altcoins are going up that much more. All right, we're going to look at that. Thanks for the questions, guys. All right, so what was I saying? I was talking about how it doesn't feel like a bull market until now, and then now it feels like a bull market. And so we looked at the entire Bitcoin market, the entire crypto market, right? Now let's just look at Bitcoin on the daily time frame. What do we see? We see more or less the same thing, okay? We see that Bitcoin right now was at major resistance designated by this green box, this green rectangle, okay? And now it's finally breaking through it, okay? Just like the total crypto market cap, there is not much resistance in this region. There isn't. There just isn't. There are some, but not much. Also, much like the total crypto market cap, if we really wanted to identify the most important level of resistance in here, I would have to say it's right around here. Why? Okay, and again, support and resistance, the best way to do it is to let price action tell you. Right here, I'm seeing resistance on this order block, okay? I'm seeing support right here. I'm seeing resistance right here, okay? I'm seeing support right there. I'm seeing support right there. I'm seeing resistance. That tells me that there's something at this level, okay? And this level is at about 40K, around 40 to 42K, okay? I would say 38 to 42K. And this coincides with the neckline, this coincides with the technical target of this inverse head and shoulders, okay? This, I believe, is still an inverse head and shoulders. It's not the prettiest inverse head and shoulders, but the target of which takes you up approximately to this 39, 38 to 42K level, okay? So I think there's a high likelihood that once we get to this region, we do experience a pullback. It's not going to be a nasty pullback. It's not going to be a huge pullback. It's just going to be a pullback, a normal retracement, okay? Is it going to be the end? A lot of people are going to tell you, oh, that's the end, that's the high. A lot of people already sold, mind you. A lot of people were saying 30K, I'm selling everything because we're going to go down. Okay, and they've sold. Other people are saying 32K, I'm selling everything, I'm going to go down. They already sold. They're going to be kicking themselves if they haven't already because the price is going to continue up, very likely. It's showing no signs of stopping. It's going to most likely continue up to this 40K level, okay? And another interesting thing, it's not just the target of our... This 40K level is not just the target of our inverse head and shoulders, but as I've shown before on the channel, if we go back to my theory that the actual bull market started on December 30th or January 1st, whatever you want to say, and you're taking this initial move from 16 to 24K as being your first Elliott wave, okay, or an Elliott wave, okay, because if I say first, I have to give you a degree, and I don't have any degrees. Right here, you can see that this salmon-colored box, rectangle, lies exactly where we would expect wave 3 to end. 1, 2, 3. My weekend update where I said, there are things I know and there are things I don't know. This is how I'm trading. There's so many things I don't know. I'm not going to focus on what I don't know, but I'm going to acknowledge what I don't know because it helps me further solidify and lean on what I do know. What I do know with a high degree of probability is that this is a wave 1, wave 2 situation. My target, if I wanted to take Bitcoin, take profit on Bitcoin in the immediate short term, it was always going to be between 38 and 42. Okay, I was saying 38, 38, 38, but anywhere between the 1618 and the 2 Fibonacci extension, which you can see here is between 36 and 41.7. Okay, so we have confluence in this area. First, we just eyeballed it, right? We looked at support and resistance of this region, letting price tell us where is an important zone of resistance where price may likely find sort of resistance below because it's an important level. And we looked and we saw, okay, price has shown this level to be support and resistance consistently throughout this period of time, which was how long? Throughout these 480 days. For 480 days, price shows you that this is an important level. If you're not just going to slice through this, okay? You're not just going to slice through this. Furthermore, we did our analysis with Elliott Wave using this wave 1, highly likely purported wave 1 and wave 2, and extension of wave 3 between the 1618 and 2 Fibonacci extension where wave 3 typically ends, okay? So that's our second thing. And thirdly, we did the pattern analysis, inverse head and shoulders of this inverse head and shoulders, and the target does come out to this area. This is your next likely area target for Bitcoin. However, that being said, I would still, if I'm really pressed to take profit and I just need the money now, I'm going to take profit there. If I can wait, I'm going to wait, and I'm going to tell you why. Because if this is a wave 1 and wave 2, wave 3, expect wave 4 to take a little time, but in that wave 4, what can you expect? And this is going to segue into what you can expect for altcoins, okay? So just remember that. This is likely going to be, let's actually go ahead and put the wave count here, okay? Let's put the wave count. Actually, I don't want to put the wave count, and I'll tell you why. I don't want to put the wave count because I'm not going to be as presumptuous in saying that there's going to be I know exactly that this is just a regular wave 3. We just started a bull market with a high degree of probability. You're going to have a lot of extensions. So I don't know what degree of wave 4, what degree of consolidation you're going to get here. And I'm not expecting it to take forever. So I'm not going to say, if let's say this is a primary degree, let's just call it a primary degree, that primary wave 1, primary wave 2, primary wave 3, and then you get primary wave 4 here. I'm not going to say that. That's a bit presumptuous, and I'm not going to fall into that trap. I just don't know that. I'm going to put that into the category of things I don't know. What I do know with a high degree of probability, though, is that we are going to have some consolidation here. Don't know the nature of the consolidation. Is it a high degree wave 4 consolidation? A smaller degree wave 4 consolidation? If I had to put money on it, I would bet that it's the latter, not the former. Because time's ticking and we're in a strong impulse to the upside. And judging by our analysis of the total crypto market cap, right? I'm expecting, let's zoom out a little bit more. Guys, if you're getting value, please like, share, and subscribe. Judging by the total crypto market cap, I'm expecting Bitcoin to also put in a similar resistance up here. Okay, I'm not expecting Bitcoin to have any significant retracements. Okay, significant is the operative sort of it's the operative word. It is the qualifier that I really want to underline. I'm not expecting any significant pullbacks for Bitcoin until after that happens. Okay, that is where I'm expecting something like that. Okay, otherwise, I'm not expecting any significant pullbacks, and maybe this takes us down to the halving. Okay, a lot of times, if you look at your price action history, just look at your Bitcoin chart, your index, you'll see that the halving comes after a pullback, but the pullback is an intra-wave correction after the actual impulse, the larger degree impulse, has already been initiated. So, would not be surprised if you got some sort of wave 1, wave 2 into the halving, and that was that was it. So I do expect for Bitcoin to make all-time high way before the halving, okay? And this may even occur faster than that, where we put in this wave 1, wave 2, and then continue on and consolidate here by the time the halving occurs. Don't think that the halving is what you have to wait for before getting bullish. If you do that, you're going to miss out. Because again, this up-only price action doesn't last long. Going back to our our talk in the beginning of the stream, it's not going to last long. It never does. It never does. It is an opportunity that is rare. Okay, the best opportunities are rare. They come and they go. You know, an alignment of the stars, a celestial sort of a celestial alignment. It doesn't come all that often, and when it does, you have to take advantage of it. So this is where I'm seeing Bitcoin. This is my next, just to recap really quickly, this is my next significant resistance. But again, I don't expect for Bitcoin to spend too much time trying to break through this resistance. And it's interesting that if you just take, let's see, yeah, it's not. Look, I mean, we've been in this for long enough. We shouldn't be surprised. You take a Fibonacci retracement of this range, this entire range, right, that we were in for 480 days, where we did our initial M pattern. Look at where this resistance is. 40,976, about 41,000. It's right on the phi ratio. Okay, is that coincidence? No. There's order to these charts. There's order to these levels. Okay, it's a natural phenomenon. These are natural phenomena that we see. These charts are an extension of us. We are natural beings. We are natural creatures. And our thoughts and our desires, our greed and our fear and our buying patterns, all that stuff is a natural phenomena. They're natural phenomena. So we shouldn't be surprised when we look at these levels where we find resistance on this uptrend is going to occur at exactly 41K. Okay? So that's my Bitcoin analysis, okay? That was my whole market analysis. This is why I'm bullish. I'm bullish now. I'm expecting a consolidation at 41K, but I'm expecting that to break. And I'm expecting for us... So here's what I am expecting. I'm expecting some consolidation at 41. I'm expecting it to break. I'm expecting people to say, but wait, we can't break it that easily. And then I'm expecting to hit this resistance once we get into the six figures, and then to retest 40K as our main support. Because 40K not only represents, okay, let's leave aside the psychologically important level. I don't really like that argument. 40K here represents this. Okay, when you hit the phi ratio is like the heart of the monster, okay? Whatever, the heart of the being, the phi ratio, the golden pocket, okay? Basically, what price action will be doing with a high degree of probability is breaking through this distribution where, okay, are we going to 100K? Are we going higher? Price is like, I don't know about that. Distributing for 480 days and then going down and breaking back below. We're going to slice through. It's going to seemingly slice through. Obviously, we're going to have a little bit of resistance here, but seemingly slice through. People are going to be like, oh my God, that's impossible. Slicing through 40K. We're going all the way. We're going all the way. We're going to 100K. We're never going to stop. A million. It's going to hit this resistance right here. Okay. And what we're going to do, actually, this is what we're going to do. Just like the total crypto market cap. Let's go ahead and put an alarm on this, okay? And you can do this on your own charts. Bitcoin major resistance hit. Okay? Just put an alarm there so you're aware. Okay? And what we're going to do, we're just going to stylize that as a dotted line. Okay? And so people are going to get really excited as we not only break through here, but we break through here and all that stuff. And then what's going to happen, we get that three-wave move down. But that three-wave move, for those of us who study price action, is going to be very welcome. Because if you melt through important resistance, which basically the phi ratio of any level, and this level was important, right? The phi ratio represents the heart of that level. So breaking the heart of that level and then retesting the heart of that level as support is going to be the move that once and for all not only leaves this in the dust, but makes it support. That's what I see with a very high degree of probability happening in Bitcoin, okay? So this is why we can expect all-time highs in Bitcoin sooner than later, and why 40K, once we break 40K, 40K is going to be the new support. You can expect us to come back to 40K. That's how I see it, okay? But expect this to happen relatively quickly. And I say relatively quickly because you're not going to saunter up as you did during these 300 days correctively. You're going to go in impulsively, right? What took you 300 days to accumulate will take you maybe 30 days to distribute, or sorry, not to distribute, but to mark up. There we go. Okay. So that's what I'm seeing with Bitcoin. So, Lily says, hi Lily, what's up? Leo says, dominance is too much for altcoins. This is perfect segue, Leo. The next thing I want to talk about are altcoins, okay? And here's what I'm seeing. First, once we get to this 40 to 41K area, we go sideways a little bit. Altcoins are going to still continue to go up because they're a step behind Bitcoin. We saw this yesterday. What did we see yesterday? Yesterday we saw that basically this M pattern could have told you the bottom for Bitcoin, okay? It could have told you the bottom of the bear market. Let's make sure that we're on. Okay, yeah, we're on a log scale. Okay, let's redraw that a little better. So if you had taken this M pattern, okay, and the breakdown of this M pattern, you could have predicted with a high degree of probability the bottom for most assets. This was the exercise that we did during the course of the 2-hour live stream yesterday. Okay, here the same was true for Bitcoin, okay? The breakdown of this M pattern gave you the low. Now, why is that significant? It's because when you look at Bitcoin, what it's done is it's now met the neckline of this M pattern again and broken through the neckline of this M pattern. The neckline of the distribution, sort of the cause of the distribution for the bear market. Okay, the bear market obviously started here, but this was really the impulse of the bear market. This was the cause, this was the effect. Bitcoin has broken through from the effect back into the cause. Many altcoins have yet to do that. So altcoins are a step behind, which is normal, okay? And, other than maybe Ethereum and Litecoin, most of them are lagging. So Ethereum, you can see, has, like Bitcoin, revisited the neckline of this distributive cause, right? This is the distribution range. This is the cause of the distribution, the impulse down. Now, Ethereum has revisited the neckline of this distribution. So, Ethereum is on par with Bitcoin in terms of its progression, right? Everything in the crypto market is linked, but not everything is always in the same phase, okay? Usually the higher cap assets are in similar phases. Litecoin is maybe even a step ahead of both Bitcoin and, or actually it's right at where Bitcoin and Ethereum are. As you can see, this was the cause, this was the effect, this is the neckline. Litecoin is back in right at the neckline, okay? And just like Bitcoin, just like we did that analysis and the total crypto market cap analysis, do expect Litecoin to come up, find some resistance at the 0.618, the heart line of this range, but matriculate through, retest it, and then run back up, okay? That's what I expect generally, okay? But what does this have to do with altcoins, okay? Once you see the altcoins, once you see Bitcoin kind of go sideways a little bit at 41K, you're really going to start to see Bitcoin dominance drop. Because you're going to be in consolidation in Bitcoin, but a lot of the altcoins will not have gotten to that point. So they will not be in consolidation. They're going to be executing this uptrend that Bitcoin has already executed, that Ethereum has already executed, that Litecoin has already executed. So let's look throughout the altcoin. So first, let's have a look at Bitcoin dominance. Okay. Let's have a look at Bitcoin dominance. And we can see Bitcoin dominance is still where we thought it should be, okay? I know a lot of people are saying, well, Dean, you said that it was going to go down. Well, we're still at resistance. Nothing's really changed. If you look, what do you see? You see 3 years worth of resistance. Do you think we're just going to plow through? I don't think so, okay? I don't think so. You can get a move up to this level. We have done that in the past. We've gotten a move up to this level, and promptly thereafter we've come back down. Our daily momentum indicator is up in this overbought territory, okay? But more importantly, our weekly momentum indicator is not only in this overbought territory, but it's printing strong bearish divergence, okay? Strong bearish divergence, really strong. How do you read that for those of you who don't know? All right, really simply. If you look, here's a high, here's another high, okay? You've made successive higher highs on this chart, okay? Here, you've made even highs. Now, does that mean it has to stop? Not necessarily, because in a strong trend, you typically see these bearish divergences not play out, okay? This is why we're not indicator traders on this channel. We understand if you want to be successful, you want to have a high hit rate in your reads of the market, you have to master to a certain degree, to a certain, you have to have a certain facility with reading price action and using indicators corroboratively. If you use indicators primarily, you're going to be screwed, because every machine, every indicator that's using stochastic RSI is reading this bearish divergence, thinks that we should have gone back down here, we should have gone back here, that they're reading these divergences, and they've been reading it as being overheated since December of last year, okay? You want to use price action. How do you use price action? You would have seen that we've been in a channel, and that it was likely that we revisit the tops of the channel, and only at the tops of the channel should you, with a high degree of probability, expect a move back down. Okay, so Bitcoin dominance hasn't changed in that regard. Are we going to go much higher? I don't think so, okay, for those reasons. Okay, so when Bitcoin... let's go on a bit of a smaller time frame. Let's go on the 4-hourly time frame. Okay, so what can you see here on the 4-hourly time frame? You're seeing this may very well be, as I said, a channel of distribution. That's still within reason. That's still valid. And it's only valid because, let's see. If this is your initial break of structure, no, it's not valid. It's not valid because, look, your phi ratio, your 1.618 is broken right here, okay? So this is proven as an impulse. So this is now a wave 4 or some sort of interwave consolidation. This is a veritable impulse, okay? So our idea that this is distribution and this is going down, that is invalidated. But our larger thesis of this being at resistance and this moving back down is not invalidated, okay? This is basically just impulse, interwave consolidation, final impulse, topping out somewhere near here, and then we see a distribution down, okay? So that's what I'm seeing on the smaller time frames. Okay, now looking at altcoins, because it's important now that we acknowledge that altcoins are not necessarily in the same phase as Bitcoin's in. Okay, remember what phase Bitcoin's at. Bitcoin is right at the neckline of its distributive channel. Okay, it's right there and it's breaking up and out. However, if you're looking at altcoins, which are here, let's go on the daily time frame. Should we go on the daily time frame? Yeah. Yeah, that's fine. So altcoins have yet to do that. This is an example. Looking at Cardano, okay? This is a relatively high market cap altcoin, okay? This is not some, small cap project. This can be argued to be the neckline of this distributive channel. Remember, Ethereum, Litecoin, Bitcoin, they're over here. They are testing and breaking, as we speak, the neckline of the distributive channel that led to the breakdown of the bear market into this accumulation. And now they're over here. You've yet to reach that level with Cardano. So while Bitcoin is playing at the 41K level and going sideways, consolidating, right? Playing up here, as it were. Cardano is still going to be down here, right? Breaking up, testing this, breaking up, and reaching the levels that Bitcoin's at. It's a step behind. Okay, most altcoins are a step behind. So prove that to yourselves. Go through your watch lists, look at the different assets you're invested in, and see how it makes sense that while Bitcoin is going to be consolidating on a small time frame, or on an intraday time frame, these altcoins are going to be running up. As a result, you will see Bitcoin dominance come down. Okay, the idea that Bitcoin maxis will have people believe that Bitcoin dominance is going to 50+%, and it's gonna moon, and it's just the beginning. It doesn't make any sense. Technically, it doesn't make any sense. If you think that this is a launch pad, I mean, you really can't read, because there's nothing. Let's see. Let's go on the daily time frame. So if you're looking at this chart and you're seeing this and you're thinking this is a launch pad for a strong move up and out, you have no idea. You have no idea what you're talking about. This is not a strong impulsive move because it's based. You do not want an impulsive move that's based. You want if a move that's going to take you up and out of a channel looks like this, you know that it's corrective. But if it looks like what Bitcoin looks like, let's go back to that really quickly, just to make this point. Look at the difference. Look at what Bitcoin looked like at the bottom of its channel of accumulation, okay? Strong impulse, strong parabolic move up, okay? It is no question that this isn't some sort of small corrective intrawave correction, right? This is an impulse in and of itself, okay? So back to what we were looking at. Bitcoin dominance it was, yeah? Look at the difference. I understand Bitcoin dominance isn't an asset, but we're looking at waves, and you want to understand the character of waves. Do you see the difference in Bitcoin and the strength of that move? Now look at this. It's still corrective. And now the top of this is going to prove to be tough resistance. People thinking that this is going to continue up and out of this channel are fooling themselves. Okay? Anyway, that point has been made. Let's focus on our altcoins. And the idea is this. Altcoins have yet to do much of anything. Okay? This altcoin, Algorand, is still in its bear market accumulation. Okay? Bitcoin, we saw, broke the bear market accumulation and is attacking. Can we see it here? Can we see it here? Okay, this is so far behind, it's not even funny. Look at this. If you were to compare the different phases of the market between Bitcoin and Algorand, so this was the distributive channel that led to the bear market impulse breakdown, right? Bitcoin's all the way up here and breaking through this, okay? That's 30,000 for Bitcoin. Algorand's way down here. It's still in its bear market accumulation. So Algorand and a lot of other altcoins have yet to even approach this level, okay? Why are they going to catch up? It's because they're smaller market cap. You don't need as much market capitalization. You don't need as much money in the project for it to move. So in the time it takes for Bitcoin to go from 30 to 40K, you might see Algorand go from 24 cents to 67 cents and then catch up with Bitcoin. This is why you should be able to see the Bitcoin dominance come down. Okay? Just compare the phases of the market based off of these concepts of revisiting the neckline of the distribution range. Okay, so that's Algorand. This is why you can expect a big move in Algorand. And we talked about this yesterday when we were looking at, okay, where's the next significant resistance for a lot of these projects? Again, look at Arweave. This is the bear market. This is the initiator of the bear market, the cause of the bear market, the distribution channel. This is the bear market accumulation, okay? You came all the way down here. Now you have to go up all the way up here. Actually, Arweave is at the bottom. Imagine Bitcoin still being at 17K. This is the equivalent of Bitcoin still being at 17K is Arweave. Okay, so it has to go not only from 17K to 24K, but also from 24K to 30K. Okay, this move has yet to happen. But remember how this move happened in Bitcoin. It was a really nice, strong impulse, a wave 2 correction, and then another move up. Even though they're a step behind, expect big, strong moves in these altcoins because they have to play catch-up. And that's what you see in every market cycle. If you're paying attention, altcoins are always a step behind. But the reason Bitcoin dominance goes down is not because they're a step ahead. It's because once they start running, they overtake Bitcoin because they go up by so much more. Okay? Basic attention token, still in its bear market accumulation. This is the neckline for the bear market distribution. And it has to go all the way up here. Expect it to run up there. Okay? Expect altcoins to do a lot more than Bitcoin. Blur is a new asset. It didn't have a bear market distribution, but I do expect it to run, okay? Bonk, also a new token. Really love it. This is my my favorite shitcoin, just because, I don't know. Oh, I know why. It's not pretending to save the world. It's a meme token, but it's a responsible meme token, and it's well conceived by serious people. And it's well organized. I really like the project. In any case, this is a very low market cap asset, and I like what it's doing here. It's coiling up. Expect a break next a significant resistance is probably up here. Okay, so I'm expecting Bonk to give you, before the next consolidation, probably 130%. Okay, Dent, you've yet to come back up to this region. Like most altcoins, most altcoins, right? This is the M pattern that broke down, that gave you the bear market. You have to come all the way back up here, consolidate, and then break up and out, okay? It has yet to do that. Although Dent is ahead of Arweave, it's ahead of a lot of these other altcoins that we just looked at, because it has left more or less its bear market accumulation. Okay, so Dent is kind of at around 24, 25K where Bitcoin was, if you wanted to compare apples to apples. Okay, Dodo. This is, I don't have a, this is a fairly new asset. Yeah, I don't have a proper bear market distribution for this, but it is outside of its bear market accumulation, okay? And the next significant resistance is all the way up here. So do expect a major run up, okay? For Dodo, for a lot of altcoins. Okay, same thing with Dogecoin, outside of its bear market accumulation. And actually, Dogecoin is where Bitcoin is, more or less. Okay, it's a high cap or it's a large cap altcoin. Yeah, so this isn't so surprising, but it's at the neckline, as you can see here. It's at the neckline of its bear market distribution. Okay, this sort of triangle, this descending triangle that broke down, that gave you the bottom of the bear market. Now you reaccumulate and you go back up after having tested this neckline. So Dogecoin is probably going to find its next significant resistance at the midline, right, at the heart line, or the phi ratio of this triangle right here. And then it's going to consolidate just like Bitcoin, break way up, okay, and then come back down to retest this as support. All right, that would be the equivalent of Bitcoin going back down to 40 to 41K, retesting it as support before moving forward. But I guarantee you guys, when Bitcoin hits 6 figures, people are going to lose their shit. And a lot of people are going to start, you're going to see a lot of retail is going to jump in, FOMO in to Bitcoin once it hits 6 figures. And then it's going to dump all the way back down to 41K. Okay? But the savvy retail that buys at 100K or 120K, even though it goes down to 40K, they're going to hold, because they may know that we're not done. We're not even close to done. All right, DOT. It's already started. Okay, Polkadot's already started. It's on the brink of a breakout. And as you can see here, we don't really have... Oh, yeah, we do. I just didn't zoom out enough. So this is our bear market distribution. Boom. It has to come back all the way up here, right? So DOT's coming back down up to this neckline, about 178%. Expect to see massive gains in altcoins. So for instance, DOT, 178%. And I would not be surprised if you see this within before the next full or new moon, right? So the next new moon is on the 20th, it should be, right? Because the last one was the 6th. Yeah, around the 20th. And we are the 11th. So about 9 days. So 7 to 9 days. I wouldn't be surprised if DOT did 180%, okay? But Bitcoin only did about 40%. Does that make sense? This is where you see Bitcoin dominance coming down. 180% in 180% in DOT, in Polkadot, and about 40% in Bitcoin, right? Within the next 7 to 9 days. Okay, that's the next new moon, maybe 7 to 12 days, let's say, because let's give it 3 days after the new moon. So I hope you understand how I'm seeing this matriculation of Bitcoin dominance coming down, altcoins gaining against Bitcoin, but not a dump in Bitcoin, but Bitcoin going up, but not as much because it's already done that. Why do we use Bitcoin as a proxy for the cryptocurrency markets at large? Because it's the biggest market cap in the whole crypto space, and it leads. It always leads. It leads bear markets. It leads bull markets, right? So generally speaking, you look at Bitcoin, you can understand where the crypto market is going, generally, okay? So here, DYDX is doing this sign of strength, this bull flag. So right here, this is impulse, bull flag. Imagine or expect another move up, probably to the 618 of this area, another consolidation, okay? But DYDX is right now above its bear market consolidation. Okay, Ethereum we talked about already, but just to recap, I do expect for it to come up to the heart line of this range of distribution and then consolidate for a bit, okay? Because it's on the advanced schedule, like Bitcoin, like Litecoin, right? It's already done quite a bit, right? It's not over, but it's, I don't expect it to go up too much more before that consolidation at the heart line. So about 50% in Ethereum before a bit of consolidation and then a larger move. So basically, I'm looking for an impulse, a bull flag, and then a larger move, and then a retracement. Okay? And again, I talked about this before on the channel. It always ends up being that these patterns look like bullish patterns. This is how we get bullish patterns. You get these inverse head and shoulders, these bullish reversal patterns on your charts because they form consistently. You consistently get a wave 1, you consistently get a wave 2 out of a bottom, okay? And the bottom is the bottom of your head, right? And it's the opposite for a distribution, for a bear market, for a bearish pattern, okay? Hedera hash graph. So this is behind, way behind, way behind. This is the bear market distribution channel. You have to go all the way up here, okay? So in the time it takes for Bitcoin to go up 40% to 41K, Hedera hash graph has to put on a 200% move, okay? Don't be surprised if that happens in the next 9 to 12 days or 7 to 12 days. Okay, Chainlink, way behind. But what do I like about this? The fact that this is a very bullish cause. This is consolidation like you've never seen, okay? This is very strong bullish consolidation that should take you to the neckline here, which is not much, to be honest. But it should take you up, 30 some odd percent, if I'm not mistaken. About 48% from here, okay? Thereabouts. Before a little consolidation, okay? Link is always a bit underwhelming, but it'll take some time. Once Link gets ahead and out of all of this bear market channel, it'll do a lot more impressive things in terms of positive price action. So Litentry, it's still in its bear market accumulation, as you can clearly see. It has to get up to the top of the channel. Okay, that's all it has to do. So that from here is about 63%. Okay. Litecoin, we already talked about. I'm expecting the next significant resistance to be the heart line of this bear market distribution channel. So up here at about 80%. Okay, and then once we get here, I don't expect a big move down like this. No. I expect some consolidation and then a move up, and then back down to here, okay? But I don't expect a massive move down from here. All right, MOVR. Let's see. So this is above its bear market accumulation, but I don't have a bear market distribution channel. But my next significant resistance, it's hard to say. It's really hard to say. I don't know. I don't know that this is significant. There's some resistance here, but this may be live once we okay, here's what I'm seeing. I'm seeing you come up here and you flag out there. So basically I'm seeing this kind of accumulation, this kind of consolidation at this level in MOVR before it's basically in price discovery, meaning there's no resistances to be there's no real resistances on the chart after that. So that's what I'm seeing with MOVR. Okay, moving on. Harmony 1. Okay, this is above, very clearly above its bear market accumulation, and it has yet to hit the neckline of its, I think it's right there, the neckline of its bear market distribution. So it's got to come up here. It's got to come up at least 140 some odd percent, okay, before encountering significant resistance. Okay, RSR, very far from its bear market distribution, which is all the way up here, okay? So RSR is going to give you about 250, 270% before encountering any significant resistance. Okay, sand should be giving you about 123% before any significant resistance. Okay, SHIB above its, well, no, it's just now leaving. Okay, SHIB, I think, has put in a wave 1, wave 2 situation. I'm seeing this as a wave 1, wave 2 situation for SHIB. Okay, so the next target is up here, right at the baseline of this bear market distribution channel, and it's probably, I'm going to say, consistent, or it's probably coincident, confluent with the wave 3. Not quite. Okay, so I'm still seeing SHIB come up here, but then continue. Okay, so the phi ratio here is about at the heart line of this range right there. Okay, so I would not be surprised if SHIB did this, something like that. Okay, just based off of these levels, based off of, you know, the fact that this was clearly support lost, so you're going to break and then retest this level. This is the level in SHIB right here. But I would expect us to come to this level as our next major resistance, thereabouts. Okay, I think you're going to have a little bit of resistance here, but you're eventually going to break through relatively easy. Okay, so that's what I'm seeing with SHIB. Okay. Synthetics. Always love trading this asset. Okay, this is my neckline. I think you come up here at the very least before entertaining any kind of significant resistance, about 109, 108% away. Okay. Telcoin. This is coiling up quite nicely. This is what I'm talking about when I say breakouts and bull flags, breakouts and bull flags, breakouts and bull flags. Okay, that is exactly what you should expect, not just in Telcoin, but in a lot of assets. Okay, the next support or resistance is over here. Price action is telling us. Okay, it's up there, which is the base of this head and shoulders that broke down, giving you the bear market low. Okay, and that's approximately about 123% from here. Okay, and that can happen like that. That can happen like that. I don't know if you guys have been around long enough, if you've experienced the bull market, but it's one of the most beautiful things. Even when the price isn't going up much, it's going up incrementally, and then it just pops up, and then it stops a little bit, and then it pops up some more, stops a little bit, pops up some more. You go to sleep, you wake up, and your net worth is doubled. It's crazy. Tron. So here I am not. So I actually have to show you a better chart, or a more a chart with more price action for Tron to make sense. And if you want me to look at any assets, please put it in the chat, and I'll get to it after I get through the watch list. But for Tron, we have to look at a more complete chart. And this more complete chart tells us that the next resistance, so I think you can clearly see that this is a triangle. And this triangle has not only been broken out, but it's been retested. So it's not like you can't go up from here. It's already been retested. It's okay. It's good to go. Your next significant resistance for Tron, and I think I have an alarm on this, do I? Yep, I do. This is where I would take profit if I had to take profit next. And again, just to be clear, I don't think this is the end of the bull run, and my strategy hasn't changed. Most of my positions I'm not touching until the actual end of the bull run, which isn't anywhere close. But there are some assets I have to take profit just to pay bills, just to pay for my basic necessities, and this may be one of them. I have a couple Tron positions, so one of the smaller ones I could take profit on. It would be here, because this is a significant resistance right here. After the breakout of this and the retest, you typically come and you find resistance at the top of the channel, or top of the triangle. But where do we get this resistance in Tron? If you zoom out, let's zoom out on the weekly, you can see that once back in 2017, when I first got into crypto, and I bought some Tron by selling some Bitcoin, because that's the only way you could buy altcoins at that time. You can use this data point in 2021, and these three data points, right? 1, 2, 3 will give you this trend line. I think it's very likely that you have a reaction at this trend line, which is about 80% of the way up. Okay, so what I think is likely is that you get this 1, 2. I think this is a wave 2. Let's see. Yeah, I think this is a wave 1, wave 2. I think this is wave 3. I think you're gonna get a wave 4. I think you're gonna flag out right below this resistance. So I always talk about on the channel, consolidation at resistance is bullish. Rejection at resistance is bearish. But consolidation and rejection are not the same thing. Just because you stop here and you go down a little bit, it doesn't mean it's bearish. So we could get a kind of flag or some sort of bullish consolidation at resistance and then a pop out. And then what's going to happen is that you get a retest of that, right? Because you can't necessarily just pop this large resistance without retesting it as support. So I hope that makes sense. I think this is very likely for Tron. And if you measured this, let's see. Boom. That works. Look, wave 1 and 2 are down here. Wave 3 comes between the 1618 and the 2 Fibonacci extension. And then wave 5 goes whatever. It can go all the way. It could be extended. It could be regular. It doesn't matter. But then eventually you come back and retest this high time frame resistance as support. Okay, so I can see Tron doing just that. Okay. So I don't know if it's even a good idea to take profit here, to be honest. It may be best to take profit up here, which would likely be, if this is indeed a flag, let's say we do flag out. I don't know how we're going to consolidate here, but let's say it was a triangle, which you can get in wave 4 and only wave 4. For my Ellioticians, we know you cannot get triangles in wave 2, only can get triangles in wave 4. Then you would have a more than likely a 1-to-1 extension. So I would say about 28 cents thereabouts. I would say 28 cents would be a good target for Tron. Hold up 1 second. I gotta check something. I got an important email. Gotta see. Okay. I'm gonna respond to this. Okay, I'll respond to this in a moment. We're almost done. Okay, so that's Tron. So yeah, I think 28 cents would be a really good place for a TP, because I think you're coming back down to retest that larger resistance as support. Okay, so 3 more. Okay, VeChain. VeChain. This is, I mean, such a nice chart. Look at this. This is your bullish pattern, W pattern, inverse head and shoulders, whatever you want. This is a breakout. This is a perfect retest. You found support right at the neckline, right? On the high time frame. Boom. This is it, right? On the higher time frame, that's VeChain, right? Higher time frame. This is clearly not a wave 1, wave 2, but it's a wave A, B, C, okay? It's a wave A, wave B, wave C. So that's very likely what you're getting. And that wave C is going to come very, very probably to a minimum of the 1 Fibonacci extension. But obviously, because it's a pure impulse, it can go much, 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 much higher. Okay, so that's just the really, while we're on the weekly, just the really high time frame analysis for VeChain. But on the smaller time frame analysis, here we're looking at inverse head and shoulders. Right here. Let's see. An inverse head and shoulders that's popping out. You're just in your bear market accumulation, and you're just breaking out of it, okay? You're just breaking out of it. So I think your next significant resistance is going to be all the way up here, okay? So the neckline of this distribution range, so around here. About 53, 54% of the way up. Okay. This is your next target for XRP. You're close to it, but you're gonna have to come all the way up here to the neckline and then flag out there. You're going to have to consolidate at resistance. So XRP about 26 to 30%, right? And once it gets into this region, do expect some sort of consolidation before breaking out. So it's, as far as altcoins go, it's closer to Ethereum, Litecoin, and Bitcoin, right, than, you know, some other smaller cap altcoins. But it's not yet there. And Zilliqa, last but not least, you've left the bear market accumulation, and you have now the task of hitting... Actually, you know what? If you look at this, this was your distribution range, breakdown. Now you've come all the way back to the neckline of that distribution range, and you flagged out at the neckline of the distribution range. Now you're popping out. Okay, your next significant resistance, or your next resistance that you should expect, is the heart line of this distribution channel right here. Okay, and then flagging out there before you pop out, kind of like what Bitcoin's at. So I think Zilliqa's kind of ahead of the game. So that's it for me, guys. I hope this was helpful. I hope this was useful. Don't forget to like, share, and subscribe if you got value. Take care, and I hope you're enjoying some really, really nice gains in your positions. All right, take care. I'll see you tomorrow. Bye.